contributions for a month. We use that part of that contributions to pay benefits and to pay other administrative expenses. Whatever is left is invested. And that is what becomes what? Our reserve. And we have quite a huge reserve. So don't worry. Your pensions are secure. So for us, I want to chop pension. You can also chop pensions. So that is our reserve. So we try to align our reserve with our longevity risk. We are trying to look at robust frameworks to make sure we identify all the risk, especially the longevity one, and how to mitigate it so that we can move on and make sure the scheme is sustainable in the long term. Okay. As I was saying, our oldest pensioner, currently when it comes to SNP, on the SNP pension payroll, we have somebody who is 115 years. And that person has been collecting pensions for almost 27 years. And if I had my destiny, I would have shown you when we went to visit it. The man is very strong. It doesn't look like he's dying anytime soon. It doesn't look like he's dying anytime soon. And then the oldest person who has been on the pension payroll, we started paying pensions from 1991. There's a lady, is a woman, she's been there since 92. And she's still, I should have brought that in. There's very healthy, very healthy. I think it's only one person that I saw in the has been hospitalized because we took those who have done at least 25 years and more, and we're visiting them to make sure they were alive. Because, don't mind me, but here's the thing. You know, after 72, whatever we pay, you know, normally when you pay your contribution, when we did the calculation, realize that your contributions pays for your pensions. Mr. Tego will tell you, only for 3 years. After that, SNP has to pay. So after 12 years on the pension payroll, you would have chopped more than you have chopped. So what we say is that every year, you have to, on your birthday, you have to fill what we call a pensioner certificate so that we know that you're alive. If you don't fill it, we stop paying pensions. And when we stop, they come from their grave. They come and tell us, we are still here, so pay us. So we continue paying. And pensions, we pay, as long as the person is alive, we pay pension. But families, I think some people have gotten to know that when they die after 72, we don't pay. So they don't report the death. That's why we make sure that they fill that pensioner certificate so that we also don't pay. From next year, Mr. Tego, this is for your information. We are doing it for every pensioner, and it's every 6 months. Because pension belongs to the person who earned it. It doesn't belong to the family. So if the pensioner dies, that money has to be returned to SNP, and we pay it as what? A survivor's benefit. That's different from what? A pension. So we do that life certificate we are going to do it every 6 months. And right now, it doesn't matter your age. You fill that life certificate. We are also, under the new law, they moved the guarantee period. I told you they enhanced the benefits. Now they moved the guarantee period from 12 to 15 years instead of the vice versa. So we are also looking at bringing back to 12, or even if, that means if you can manage to increase the retirement age to 65, then we are looking at bringing the guarantee period to about 7 years. But that is for those people there, job 600 to decide, not me. I mean, the actuaries and the technocrats will say it, but it's for them to pass the law. We are also trying to consider using inflation to index pensions. And then we will do more redistribution. When I say redistribution, we are going to pay those down there more increase than those who are receiving a certain pension. Here is a man who was receiving about 40,000. Was it 40,000 when he went on pension? Recently he died. His pension is around 90,000. Do you know how much we are paying to his survivors? 4 million Ghana cedis. because we're increasing the pension faster, you see. But now we want to slow down the increase because it has implications for us. We also want to convert the large, like the 4 million, we want to convert it into annuities for the beneficiaries. Because giving that money to people, I mean, like some people I know, they'll marry, the man will marry again, 2, 3 wives, have more children because he has money. And the children who are supposed to enjoy the money, or the minors, may not have access to it. So we want to look at changing the survivor's benefit into a pension one. That one will reduce our liability in the short term. Okay, so we talk about adjusting contributions rate. I don't want to go there because the pensioner, the workers and the employers will beat us in SNET. We've spoken about retirement age, increasing the retirement age. We've spoken about moderate indexation rate. What we are trying to do in SNET is to enhance the investment returns so that we can give better, if we can get high investment returns, we can give the high indexation that we do every year. And then we're also looking at parametric reforms. I'm sure if the NPRA man has been here, we have told you that we are trying to do some reforms of the law because we've been operating the current law since 2010. And after 2010, we see that there are some shortfalls and that has to be changed. I think I'm done. Oh, okay. At the end of the day,
fund ratio being at 2.8 and the developed world or economy has 0.1 and all that. I want to throw in a caution that most of the developed economies or countries have a system different from ours. They do the pay-as-you-go. And the pay-as-you-go element or system requires very little reserves. So when you compare with their benchmark, you may get it error. You have an error there. So I would prefer that you take yourself out of that comparison and keep a benchmark of 4 for scale premium systems. So that, because even down here, changing of contribution rate would take you centuries because of agitations and labor front. So for them, pay as you go, it comes from their general revenue. They calculate the premiums against the beneficiaries and then send it to Parliament and they pay. And then they divide it over the working population to give them their contribution rate. So every year the contribution rate changes. Yes, it can change. It can change based on the payments that they have to do. So for us, you are keeping a reserve in order to be able to be afloat so that you don't get all the tractions that may come.
Mr. Tego, if you heard me correctly, I said there are no international standards.
Yes, but I'm saying that...
No, I just mentioned them as example. I wasn't comparing SNET to them. We cannot do that.
Okay.
When you talk to ISA and ILO, they tell you that each country has to define their own benchmarks because it depends on how the scheme has matured, your contribution rate, and so many factors. And in SNET, I think we have set a benchmark of 4 for us, and we are trying to get to that 4. So I'll just mention them in passing, but not comparing us to them.
Okay. Thank you.
Yeah. My question is to compare your presentation to the previous one, where we're looking at policyholders in the insurance space. And when they were speaking, they spoke about is it annuitant, data for annuitant or something that they didn't have, if I'm wrong. like they didn't have data for annuitants. And I believe that most of if there is a scheme in Ghana that pays annuities net, the pensions payment are annuities. I'm wondering if we can we use the SNATE policy data to cover one that they are supposed to buy
from
45. They are supposed to buy annuity. Pricing these annuities has become a challenge for the insurance space. So I'm just wondering how we can combine your two revised tables, 96 and 2050, to what is being done so that we can have a comprehensive life table that can price financial security product. Thank you. I just want your opinion on that.
I think that's a good idea if we can combine the two, but I think there are little variations in here. In SNET, what we do is cumulative. Somebody can work, stop, come back, work, stop, and at the end of the day, we'll pay the pension. But I think with my little knowledge, I'm not going to say I'm an expert in insurance, but with my little knowledge in insurance, if I have a life product, I pay for some time and I stop, I think I lose my benefits. And I'm sure they wouldn't add that class of people to the data that they are dealing. And unfortunately, Wafaya is still around, so if we want to see how we can combine the two, we can sit down, come down with a framework, and then see how we can get one mortality table working for SNET and working for the insurance industry. Thank you.
Last but one.
Okay, it's in two folds. The first one has to do with, is there a system for a SNET contributor that have taken a lump sum to revisit his contribution? That's the first one. Second one is, there was a complaint about making a payment after 60 years, which is a 12 years period for a SNET contributor. So I want to know if SNET engage in investments of SNET fund contributed to the scheme, which could have allowed for anybody that goes beyond the age limit, which could be used so that this aspect of complaining about the burdens laid on SNET could be revisited. Thank you.
I think there was a window for people to do that refund of lump sum to get pension, and it's passed, so you cannot come back. If you've taken your lump sum benefits, it's done. For those who are contributing beyond 60, SNET does not retire people. You have to come and tell us that you have stopped working and you want your benefits. There was a little this thing that we stopped collecting contributions, but I can tell you that we've revised that. So those who are more than 60 years can still contribute. Yeah.
Okay, we are taking the last question.
Hi. My first statement would be SNET's data will differ from the insurance data because insurers underwrite policies. SNET, as soon as you are employed, you must pay. So with that, it would cause a little bit of distortion when you compare the mortality rate of the life insurers or to the SNET. So that's the my question is a little bit, I just want to see the actuarial hold of things in terms of longevity risk. Okay, looking at a pension scheme, the best way to get around it is through design, and the defined benefit scheme, we know in Ghana is much more political. What the government or
Please, defined benefit is not politics. Pension, before the start of the pension scheme in 1991, we had external actuaries coming down to Ghana to do the evaluation, help us to design the benefits and the contribution rate and all that. And that was what was used in promulgating the PNDC law 247 that we used to run till 2008 when there was a reform. It's only the reform that I was saying that there should have been an actuarial valuation before the reform was done. But at that time, I think the political pressure on the government was too much. So he went ahead to do the reform. And even with that, after the implementation, we had the Government Actuaries Department from the UK coming to undertake an actuarial evaluation, and that led to a reform, an amendment to the law. We call it 883. And that amendment is what portion of that 766 was amended, and that's what we are using. Okay, so it's not everything that is done politically. There are some few political interference here and there, but most decisions are done based on actuarial projections and all that.